Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
As you can see, we are not in our natural habitat. We are in a different habitat.
We're on the road.
It's a travel.
Right,
it's a travel day.
Right. It's a travel day. However, you're important to us, and the new numbers are out, and we would not want you to miss them. So here we go. We have lots of good charts, information, and questions for you. So let's get going.
Okay, so this is a market action. This is a market update for the Las Vegas real estate market. We'll call it the mid-month market update. It's like middle of May. And it's this data is brand new. It's last week's data. So we remember we look at every week. We just compare Las Vegas week over week so we can see the changes as they happen. So we'll start with the market action index. 44 basically hasn't changed substantially, but there's something else happening here because this is the 90-day average of it. So this doesn't move very fast. But something happened last week because everything went the opposite direction we didn't think it would go.
Yeah, it's kind of crazy. So hang with us and we'll show you what happened.
Okay, so last week when we did it, we saw all the numbers, sort of like inventory went up for the first time, median list price kind of leveled off, the price per square foot dropped by $1, like almost all the leading indicators sort of like looked like this thing, the market in Vegas real estate was just sort of starting to do its annual level off and then normal decline into the summer and fall, right?
Right. It was losing its fizz.
Losing its fizz. Okay. So we opened up the data today. The first thing we noticed is median list price. Median list price was actually up. It's up to 550. If you look at January, it was 485. That is like, there is no scenario in which if you would have let people guess in January what they thought it would be in the middle of May, that people would have said 550. Like they would have laughed and made videos making fun of us.
Oh, wait, they did.
Okay, so here's the thing is median list price is still climbing. Price per square foot on the next one here, as you can see this, it's up. It went back to 255. It's up to 256. But it was 249 in February, and it was actually below that a little bit below that in September, October, November, December. So it's been climbing sort of the whole time, which is pretty nice.
It is. You know, the other interesting thing that's happening in the market is there are a lot of properties selling off the MLS, and this is not quite capturing that. So I think that's an interesting thing to talk about. But let's get going with these numbers, and we'll discuss that a little bit more.
Yeah, when we show you the high end, when we talk about what's happening in the top quarter of the market, it's going to surprise you quite a bit. Another interesting thing on here is if you see median days on market dropped, we've got a chart to show you that too. Inventory. Okay, inventory in January was 3,800 homes for sale in Las Vegas. That's below 2019. And then last week it clicked up like a small amount, like 20 net properties. So 20 more properties came on the market that sold, which we normally see this time of year, right? Okay. It dropped, and it wasn't a lot, like 150 more homes sold than came on the market in just last week alone. Guys, think about that. 150 houses. This thing's been changing by like 50 to 70 a week. And it literally had a hot 2 weeks of inventory change.
It is. And I think what's happening is people are just kind of hanging tough. I mean, we had the Federal Reserve say, hey, we're not going to change interest rates maybe on the next meeting. And there's all the things that are going on in the market regarding the debt ceiling, so that there's just a lot of rumbling in the market, and I think it's causing people to maybe not bring properties on the market because I can't think of anything else that would do that this time of year. I mean, we're not talking that this is the holidays, okay? You know, around Christmas time, fine, people don't bring properties on the market, but this is not what that is. So, you know, why are people not bringing properties on the market?
I don't know that that's it, but I think the total number of sale, I think people are buying. The inflation data that came out was substantial. It was, inflation's way under control. The jobs numbers are off the charts, low, 3.6%, I think, unemployment. And in Vegas, even though Vegas had the quote unquote worst, it's misleading. We did a whole video on that because construction and leisure hospitality jobs are fake. It skews the numbers because those have statistically very high unemployment, but it's even in Vegas, it's super low. So I think people are seeing this and they're seeing the market keep going and they're like, forget it. I'm not, like, everyone waited for the crash. The crash never happened. Everybody that was told all these reasons why the market would crash, either in 6 months or a year, an opposite is happening. When we look at price per square foot here, now you see this chart. Now you could see that. Now remember, the bottom of this chart's not zero; it's $150 a square foot. So if you make this thing zero and you expand the chart all the way up, you can see there was a slight decline, about 7% in median home prices. It was one of the highest in the nation. I think we were like fourth or fifth. San Francisco and places like that had much higher peak to trough, but we're past the trough. You can see the trough there. We're actually above it. We went from 249 to 256 now. That's substantial. That's a $14,000 appreciation on a 2,000 square foot house in just 3 months.
Right. So what do you think is happening with the inventory? Like, drop us a comment because we're to some extent we're at a loss to what's causing all this too. So we'd love to hear your take on it. What's next?
Okay, median days on the market. This chart here, this gives you idea of how hot the market is. Mm-hmm. You can see the substantial difference there. What's also interesting is if you look at go on the left of the chart and you look at the little diamonds and the circles. Remember, these are the 7-day and 90-day averages. And you go back every year, the market had basically stopped. Like it had turned the corner and was going back to its normal summer and fall, meaning we still weren't having properties flooding off the market. We had more of a balance in days on the market. And when you see this, the number of days on the market is still declining pretty substantially. It's going to drag that number down. And then inventory is doing the same thing. We just saw another inventory decline. And you can see the 7-day average of inventory means that the 90-day average will keep declining because that's what that little dashed line means, right? It has to cross over and go above it before inventory starts increasing. But if you look at last year, when everyone said that market was going to crash, right? It was above it. Inventory was climbing substantially. If you go back to June of 2021, it just crossed and was above it. If you go back to 2020, it was above it. If you go to 2019, it was above it. If you go to 2018, it was about the same. This is the first year in the last 6 times this thing has been measured where inventory is still declining and we have way less than pre-pandemic amounts of inventory.
Right. And interest rates have kind of leveled off. So buyers are interested in buying so long as there's a product out there that they're willing to buy.
Okay, this next chart here, this is the market segment chart. And the reason we wanted to point this out is that median price. Now, this is the top. This is the quarters of the market: top quarter, second quarter, third quarter, bottom quarter by prices of homes. If you go back and look at our videos from probably the fall, you will find that median price of the high end was like $895. It was under $900,000, which means the median price of sold properties in the high end is up $400,000 in like the last 5 or 6 months. Absolutely tremendously on the top quarter of the market is like on fire. Didn't you just have it in your office, a massive closing?
Yeah, we just closed one for $11 million.
Yeah, that's pretty nice. Okay, so in summary, the last week when we did this update, the market looked like it was doing its normal turn. We saw like every category change more to okay, it's starting to chill. We're going back to that summer. Even though it's later than normally it happened, I honestly, when I pulled the numbers, I was shocked. I was like, we expected it to chill out for a month or two. And then in June, do what it did last year, which is inventory starts climbing and everything. But it's showing the opposite of that right now. Prices are still going up. The level of inventory is dropping substantially. Where does this leave us, Oana, in the fall if interest rates start to tank?
It's going to be really interesting. So right now, we have no inventory and buyers are willing to buy. What happens in the fall when we traditionally have rising inventory, but not as many people willing to buy? It could be a really interesting fall with lots of activity. It could even be that we'll have more transactions in the fall than we did in the spring, which I think is going to be wild. We
will for sure 100% have more transactions in the fall this year than we did last year. Mm-hmm. I would love to then see the year over year peak to trough crowd who only will quote June 2022 as the benchmark for any value of measuring anything has to be measured based on that, which is ridiculous. To then do the year over year comparisons where sales will be up 20, 30, 40%, in the September, October, November, because interest rates will be substantially less than they were. And we're already through the highest, interest rates peaked 6 months ago, and they're already have declined substantially since then.
Right. So interest rates are either staying the same or going down. We think that they're going down for a lot of reasons, like the Federal Reserve not raising interest rates, the fact that all of this is factored in. The debt ceiling is kind of something that's kind of looming out there as far as interest rates. It's concerning people, but we'll see how that pans out. I mean, obviously, Congress has never not raised the debt ceiling, no matter how much they've postured and done all their craziness.
Yeah. Well, no, they did. They have a proposal to raise it, but
right.
It hadn't been signed.
Yeah, no,
he's got to sign it.
Yeah. So there's all that going on. The thing that I want to talk about a little bit was this thing where sellers are saying, you know what, I don't want to put my house on the market, but maybe I'll sell for the right offer. And it's not just happening in the luxury market. It is happening throughout the market, primarily in the luxury market. So there's this thing where there are all these transactions happening that you don't see because they're not in the MLS, so it's harder to track them. You can track them through the county recorder, but almost no one does because it's just too cumbersome to do. But they are out there, and I think from what's happening anecdotally at our office, it's really exploding. So we'll have maybe a good number of sellers. We'll put it that way without saying a number, but a good number of sellers say, well, if the right offer came along, and then the right offer comes along, and we do the deal. It's really interesting. I see it happening much more than I saw it a few months ago, which tells me that there's this thawing out of inventory, thawing out of sellers, where the market is catching up to their happy number. We've been talking about the seller's happy number for some time. And to me, what that says is that the market is catching up to their happy number. Because of the reduced inventory, buyers are willing to pay a little more, which we're seeing in the numbers coming up. Buyers are willing to pay a little more and saying, hey, you know what, if you have a good product, I'm willing to pay for it, particularly if I don't have to compete with other people. The properties that have accepted offers that are contingent upon the sale of another property, those properties are getting offers. And so those first buyers are having to release their contingencies or get out of the way. Most buyers are releasing their contingencies because they do not want to give up that property that they've worked so hard to find, especially in an environment where inventory is so limited. So those are some interesting things happening in the market that maybe we don't see in the numbers, but it takes somebody to tell you what's happening that is actually seeing that in real time.
Two things. First of all, anecdotally, we had an offer in with a client on a property that was a high-end property. It was like $100,000 under list price, which is not unusual for luxury homes. And out of the blue, full price offer comes in, cash. We get a thing going, we're rejecting all the offers that we have because we just accepted full price cash offer. And we're like, whoa, like in a week, we went from, hey, we're going to, everyone's kind of $100,000 under list price to boom, someone just walked in, bought the darn thing, right? Off just boom, pulled it away from everybody. So what does that mean? Like anecdotally, what are we talking about? So we see these things happen. And so last year when we did these videos, May, June, I predicted, and you could go back and watch the videos. We predicted 4 best months. I said to buy. I said, don't buy, hold off for 4 months. The 4 months were October, November, December, January. If you go back and look at the chart where I showed you the price per square foot, those were the 4 best months, right? Yes, you would have had a higher interest rate, but remember, you could refi the darn thing. As a matter of fact, we've had a ton of refis over the last few months because interest rates have dropped like over 1%. So a lot of people have refied. The other thing too is I can't say this year that those will be the best months to buy. Meaning I said last year, hold off. I'm not saying you should run out and buy now, certainly. All I'm saying is there's just too much uncertainty, especially with what I see happening with all the numbers we just showed you. And then I'm worried what's going to happen if interest rates tank, because what happens is in the fall, inventory increases and then people have more choices. That's why home price per square foot falls every single year in the fall and inventory increases. People, they get some closing costs added in, they get some loan fees added in, they get a little more negotiation on the terms of their deal. They're not competing with people. Here's potentially the problem. We're going to have this 2020 problem where inventory was declining in the fall. And if interest rates go down enough, I think what's going to happen is they're going to be more buyers are going to come off the sidelines and say, oh, interest rates are down. Now I'm going to jump in the market. And, if you're looking at a market like San Diego, you can forget it because it's absolutely insane there even now. And I don't think that the fall necessarily is going to get much better there.
I think we like I said earlier, I think we may see a lot more transactions in the fall than we normally do. And I think that if interest rates drop, I think some of the sellers may come off the sidelines because now they're going to be in a position to say, hey, maybe I'll go ahead and sell my house and buy another one. I think we might even see this weird thing where, how buyers have the contingent to purchase based on their house selling? Well, we may have kind of the opposite where the sellers may say contingent to sell based on finding a replacement property.
Yeah, that's funny.
And I think you're going to see something really creative happening in the market. And I think it'll be interesting. I think it'll be exciting. And I know I'm kind of sick that way that I think that's exciting, but I do.
Yeah.
I think it'll be really exciting to see some more creative ways of sellers trying to find the right property and bringing the property to market, which will end up in more transactions in the marketplace, which is good for everybody because everybody wants to rotate their houses, and it's good for agents obviously because the more transactions there are in the marketplace, the more it feeds agents.
Now, sorry.
Go ahead.
So the housing haters and the crash bros, both of those are now trademark terms. I've actually got the point. Even if you think of the name, I get $5. Okay, all you have to do is think. If you think crash bros, I get $5. Okay, so here's the deal. This is what they're gonna say. They're gonna say, but Todd, when the interest rates drop, the market's going to crash because all these sellers will flood the market with their properties. And that may be true, but remember, they're also adding a buyer. So what they're doing is they're going to list their home and say, hey, I'm going to be a move-up buyer. I'm going to get rid of my $400,000 house and go buy a $600,000 house with a pool and 3 more bedrooms or whatever, right? So when they list their house to sell it, they're also buying a house. So they don't really... They're adding a list, they're adding an inventory, but they're also adding another competing buyer. And the other problem is the competing buyer's now got a shit ton of cash because that buyer's they're going to sell this house and have a ton of equity. So when they go make that next offer, they're going to say, hey, I can put 50% down or 35% down or whatever. And these poor people who are just like, hey, I need to get FHA, I only put 3.5% down. They're still going to be in the same situation they are because they're not moving a bunch of equity from one house to another. This is what happened in California for the last 20 years. And I think this is potentially going to happen in Vegas when the interest rates drop and inventory starts to increase. We get all these other move up and move down buyers with a ton of cash.
Right. And this is not going to happen just in Vegas. This is going to happen in other markets. So Vegas in some ways might be a bellwether for that because there is so much activity in Vegas. So that might be an interesting market for you to watch, even if you are outside of Vegas.
Yeah. All right.
So did you like the slides? How did it go? Leave us some comments. Tell us what you think is going to happen. Take out your crystal ball and tell us what you see happening. We've told you what we see and what we think, and we respect your opinion. You don't have to agree with us. We love your comments. Mm-hmm. Please subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.